Hello everybody. So today I'm going to cover 7 cybersecurity hypergrowth stocks. Many of them I've covered on the channel before. Some of them I have never discussed on the channel before. And I am covering these stocks based on my usual undervalued growth spreadsheet where I try to answer how much are we paying for that growth. The goal of the spreadsheet is, of course, that enterprise value over gross profit over revenue growth is as low as possible. That's when you're getting the cheapest growth. So let me just go over a review of the 7 cybersecurity hypergrowth stocks that I've selected. So today we have Crowdstrike, SentinelOne, Okta, Fortinet, Palo Alto Networks, Zscaler, and Cloudflare. First of all, why would we want to invest at all in the cybersecurity megatrend? Well, there's multiple reasons. There's multiple megatrends, and we're looking for products that are getting adopted, services that are getting adopted really, really fast. And as far as a service goes that's getting adopted fast, very few getting more adopted than cybersecurity right now. At least in the IT space, there's a very much a lot of good things going for it. First of all, it's recession-proof. Companies don't have a choice then to spend on IT. There's more and more IT breaches, security breaches, ransomware, etc. That's the last thing they will cut. They make it Zoom and they make it a video conferencing service, etc. But they're not going to cut cybersecurity. They may cut the cloud, but the last thing that they will cut is cybersecurity, because cybersecurity can literally ruin their business, and you can have a cyber attack and not overcome that cyber attack and have your business go out of business. This is mandatory spending for most companies. Cybersecurity is mandatory spending, and it's becoming more and more needed, cybersecurity, as our world becomes ever more digital. The more we become digital, the more security is becoming dematerialized, right? The business security of the past was the security guard. Today, less and less security guards, more and more cybersecurity software, because most of the business is done online. And lastly, another tailwind, and this is kind of riding over the tails of evil, is as threats get more and more sophisticated, as there's more and more hackers out there, and it gets more and more easy for these hackers to do a better job, so does the need for IT security go up. You have this built-in need for IT that is coming from these new threats all over the place. So let me go through each of the stock, tell you a little bit what they do and what I think about each of them. Getting started with Crowdstrike. So what is Crowdstrike? Crowdstrike is what we call endpoint security. Very simply, it is sort of a cloud-based antivirus software that you install typically on a laptop. Most laptops will have an endpoint security system, and Crowdstrike is the leading endpoint security system. And what they do, unlike relying on updates, every other day, what they do is they have this live threat graph that they call, and so whenever there's a threat that's detected somewhere on a network, somewhere on one of these laptops that has Crowdstrike installed, whenever that threat is detected, then the system, the AI, learns and spreads the knowledge of the threat to all of the consumers of the network. So it's an AI-driven company, right, where the more data means you're going to have the better threat stopping AI. And they have created this flywheel for themselves where the more customers they have, the more data they have, and the more data they have, the more they can ameliorate their endpoint security software that stops the threats. And so the software becomes better by virtue of the fact that they're number one, that they're the biggest. The software becomes better because they're the biggest. And every time a new customer joins the network of Crowdstrike, installs Falcon is the name of their software, every time that happens, they get better. And so that's a self-reinforcing loop. That's a network effect. And so you would come to Crowdstrike as a company customer. You would come to Crowdstrike because you know that everybody else has Crowdstrike installed, and so they're going to have the best AI stopping software, or at least that's the idea behind it. one financial reason why I love CrowdStrike, well, there's a few of them. So as you know, I'm looking for 30% plus growth in all of the stocks that I follow on the channel. And so it checks the box right here. The gross margin is also ideal for a SaaS stock. 75% is what I look for generally for all of my intangible stocks. Anytime you don't sell hardware, 74%, 75%, ideally more than 80% is even better. But that's ideal gross margins. Perhaps what's even better for CrowdStrike is that it's one of the few companies, and it's the only company out of the 7 here, that has given us guidance. They've given us guidance up until early 2026, and that guidance is $5 billion in annual recurring revenue. They have a little bit of revenue right here that comes from consulting, by the way, about 5%. But that $5 billion in ARR, when you calculate it, it implies that the CEO has guided for us 30% growth each year for the next 3 years. So the fact that this has been guided removes a lot of uncertainty, and it's the reason why CrowdStrike is actually the winner. It's my favorite stocks out of all of this. CrowdStrike is my favorite stock. So I just answered the question I asked in the thumbnail of this video. It's my favorite stock out of all of them. But let me go through all of the other ones as well. One of the stocks that often comes in the comments and that I've covered once on the channel is SentinelOne, ticker symbol S. SentinelOne is CrowdStrike's only pure play competition. So they're both pure play in endpoint security, and SentinelOne is the smaller cousin of CrowdStrike, and it's their most direct competitor. In fact, it's funny, you go to their website, CrowdStrike argues that they're the best. If you go to the CrowdStrike website, and Sentinel argues that they're the best, and frankly, unless you're in the IT field, it's really tough to say which one's the best. What I can tell you though is that for a company that has a base, right, a revenue base that is less than 5 times what CrowdStrike is, at 477 million in revenue versus 2.44 billion, it's 5 times less revenue. Shouldn't we want a company like SentinelOne to grow faster than 57%? Analysts expect 57% revenue growth over the next 12 months. But keep in mind, this is a company that's 5 times smaller. To me, this is a company that should be growing much faster, and it's not growing as fast as I'd like to see. CrowdStrike growing at 39% over the next 4 quarters from that base, in my view, is much, much, much more impressive than SentinelOne growing 57% from a base that is 5 times smaller. So I wonder why. I wonder what is going on. Clearly, the market does not place a premium on their solution, and that growth is the cheapest, and that's the pro for the stock. The stock is the cheapest in my spreadsheet. Out of all of the 7 cybersecurity stocks, is the cheapest. It would be the cheapest SaaS/IT stock in my Friday spreadsheet. Very cheap SentinelOne. At this point, you have to wonder whether one would buy SentinelOne because they find the stock to be pretty cheap, and perhaps it is too cheap. But the problem, in my view, and there's 2 fundamental ones. The margins are not as good, right? You're getting it's the lowest margin out of all of the 7 stocks for SentinelOne, so I don't like these gross margins, not as good. And then there's the issue of the winner take most or the winner take all market. You have less data for AI in the term of SentinelOne simply because they have less endpoint security software installed on less devices, and so you have less data and perhaps a less great AI, perhaps. So that's one of the reasons why I am not invested in SentinelOne. I much prefer CrowdStrike. CrowdStrike is the leader, is the pioneer in the field, and my choice has long been CrowdStrike in the space. Even though the space is probably big enough for 2 players, and right now SentinelOne is a value in my view. So let me move on to Okta. Now, Okta is a stock I've never discussed on the channel. It is in the field of cybersecurity. What Okta does is customer identification and employee identification and anything that has to do with identification. And their most famous product, perhaps, is single sign-on, Auth0 single sign-on. And so typically typically, if you're an employee of a company, most companies today are pushing for single sign-on, which you have one login for all of the different systems of the business. One of the main reasons why they want to do that is that if they ever need to lay you off, for example, they can just turn off access to every single software and you lose your access, and you can't really go back and do any harm to the company. That's one of the reasons why single sign-on is so popular. They clearly have a narrow focus and a narrow offering, even though this space is quite great, the space of customer identity. They are a pure play in identity. But one of the problems with Okta, in my view, is that they compete against many diversified IT firms. For example, Palo Alto Networks has some solutions that compete, and they also compete in identity with a lot of big firms, including big tech, who have identity solutions. So that's one of the problems. Another problem for me with Okta is that they are growing under 30%, and you'll see these three next stocks, right, including Okta, all grow less than 30%, and so in this case, I don't have to ask myself, why don't I own the stock? Because when I enter a stock in my portfolio, I really want that revenue growth to exceed 30%. So that's why I wouldn't be interested in Okta, even though the stock is very, very cheap at 0.3 here on my EV over gross profit over revenue growth. So cheap stock, would not be interested because of the growth is too small and because of the competition against a lot of big tech and a lot of major companies. Moving on to Fortinet and Palo Alto Networks. I want to cover these two together because I kind of put them aside from my investing consideration, from my investing universe, for the same reason. And the same reason is that they're both companies that started with hardware and did a lot of hardware products, and so they have a hardware legacy. And whenever you move into hardware and you still try to sell hardware products along with newly developed cloud offerings that they have now, you still have that lower growth that comes from hardware. And if you operate in the physical world, you just can't grow as fast as if you operate in the software world, and that's why that growth at 25% each, to me, per my very stringent threshold of 30%, is too small. One of the pros, though, for both of those, Fortinet or Palo Alto Networks, is that they're highly diversified, so they're going to be steadier stock, more steady eddy, less prone to volatility. They're both well known, and so of course, if I had to make a choice between Okta and Fortinet or Palo Alto, I would choose Fortinet or Palo Alto, or I would choose either of these over Okta, for example, because Okta not only is volatile but doesn't grow as fast. These ones don't grow as fast, but they don't have volatility. They're cozier, they're bigger stocks that many are confident to own, but to me they just don't grow enough. And you're paying up. You're paying up for the stability because both of these stocks come very expensive, actually pretty close to Cloudflare, which is the most expensive of my spreadsheet. So you're paying up quite a bit. That's why I would stay away from these two companies. They are more legacy players in cybersecurity, unlike Crowdstrike or even SentinelOne, who are new players and thus growing faster. Their products are getting adopted faster. Moving on to Zscaler. So Zscaler is a zero trust security company. They actually invented zero trust. It's them who pushed this tech. And what is zero trust? Well, zero trust is very interesting in that you typically will have zero trust at the same time as endpoint security. What zero trust does is it prevents the spreading of cyber attacks. So if your PC, your laptop, gets infected by a virus or a cyber attack of some kind, with Zscaler, you can make sure that the laptop of your boss or the laptop of someone else in the company network or the server of a company does not get infected. It isolates the threat to a single laptop and makes sure that not all of your apps and all of your servers get infected. And that's why all companies, to me, I mean, it seems to me when you look at the size of growth of this business, all companies are adopting an endpoint security solution, preferably driven by AI, and they're also adopting this zero trust solution just in case security is breached on a laptop. Make sure that it doesn't spread, and so they get a solution like Zero Scale. It's a big theme in In companies right now, Zero Trust, they have a pioneer in the field. They're still growing at 40+% a year. And they have many partners in this field, like including Microsoft, including Crowdstrike. They partner with a lot of IT firms who don't necessarily sell the same product, but sell complementary products. And so that's why you'll often see Crowdstrike and Zscaler sold together. One of the cons for Zscaler, however, is that a bunch of competition claims to be much better than them. And I'm especially thinking about Net. And you see a lot of chatter about how the competition is better than Zscaler. But when you look at the numbers, Zscaler keeps growing, and the competition does not seem to be making a big dent in the lead that Zscaler has in the field of Zero Trust security. Zscaler is a position that I own. It is my second position in there, along with Crowdstrike, and I very much love the combination between Crowdstrike and Zscaler. The last stock, which is a company I have a teeny tiny position in that I bought much cheaper, but that I'm not adding and not doing much with that position right now, is Cloudflare. So Cloudflare, to me, for the sake of simplicity, let's say I don't own it because it's a small position. But what does Cloudflare does? Cloudflare prevents websites from being attacked by hiding their origin server. So Cloudflare is what I call a VPN for website. It's a way to protect your website from cyber attacks by hiding the IP address of your website. That's essentially what Cloudflare does. Of course, for big companies, right? This is a solution that will be adopted by major companies, and they're the leader in that field, and they're very successful in that field and protecting companies and websites from DDoS attacks, right? And they're leaps and bounds ahead of competition. A competitor of Cloudflare, for example, would be Fastly, would be a competitor, but much smaller business. Noteworthy to say that Cloudflare has quite a bit of infrastructure in order to be able to provide that firewall for websites, and they have data centers around the world in order to protect websites. Leader in their field. That's one pro. Another pro is they're very aggressive about entering other fields. For example, Zero Trust is a field that they're trying really hard to enter. And Cloudflare is a stock that seems or claims to have a lot of optionality with its network of servers. And they say, oh, we can offer this, we can offer that. And they're trying to get in a lot of other areas of IT and offer that from their very widespread frankly impressive network of servers. But if Zero Trust is any indication of their success, they haven't been able to make a big dent in Zero Trust despite them having all of these servers. So I think this is a company, this is a little bit of a story stock, a company that's trading a little bit based on their story, and there's a lot of people who really love Cloudflare and think it's the best stock out there, and that's why you see it as the highest valuation in my spreadsheet right here on an enterprise value over gross profit over revenue growth of 0.71. So this is getting pretty high, and keep in mind this is a spin on the PEG ratio, right? The PEG ratio of Peter Lynch, price to earnings to growth. I made my own version of a P ratio of the PEG ratio, where I use enterprise value, gross profit, and revenue growth, because I believe these companies are all too early to be judged by earnings. You can't use earnings to evaluate these companies, in my view. You have to use early on metrics in the income statement, and gross profit is really the only metric in the income statement that these companies are optimized for, aside perhaps from Fortinet and Palo Alto Networks, but I am keeping those in this analysis for the sake of simplicity. And I will conclude by saying that my two winners are, out of all 7 cybersecurity hyper-growth stocks, they are CrowdStrike and Zscaler. And I'm making these picks. Really, this is only a very mild criticism on the other companies, but it's just that, I believe at some point you have to make a pick, because if I were to then it would stop making all sort of sense, and that would be a portfolio that you can't follow. It's important when you buy a stock, I believe, to be able to commit to those stocks, study those companies, and really Crowdstrike and Zscaler are both companies that I pick out of the 7 right here. And I don't want my portfolio to look like an ETF. If you don't have the hobby and the passion to study stocks, which is my main hobby, if you don't have that, then ETFs make a lot of sense. But if stocks are your hobby, your passion, ETFs, in my view, make little sense. And that's why I do this. So I hope you really enjoyed this entertainment. This is not investment advice. Appreciate your likes, appreciate your subscribes. Have a wonderful day. Thanks for watching.